The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. As we start off the show, we're up 16, 17 points on the S&P cash. And, of course, as we try to make a run at 4,000 on the S&P cash, what is the volume telling us? About 6.7 billion shares. Probably should be in the range of about 10 billion shares right now to really get anything going. And, of course, it's summertime, so maybe you could give a little bit less to it. But I'm going to say it's pretty wimpy. Volume is wimpy. Yes, we are going to say it. Some people do not have the intestinal fortitude to do so. But it is kind of a light day as we kind of try to grind up through these lows. One of the other things that's very interesting is just how high the dark pool percentage is of trades. Since you and I, as mere peons, can't trade in dark pools, the percentage of volume from outside the dark pool to inside the dark pool is pretty interesting because it tells us whether or not we've got the retail trader is active. I guess if they wanted to make it look different, they could trade on the regular exchanges. It's kind of expensive, but they'd all have to kind of get together and form a cabal. And I wouldn't put it past them, but I'm not betting on the cabal theory to actually drive this. But we've got everybody acting like it's they're going to lose their job if they don't turn loose of some cash. But there's just not that much of it. A very light kind of push higher today, at least so far. We got Tim Ward on. He sent me some charts, so we'll look through those. If you want them, email me at path@tfnn.com if you want to go through them at home while we talk about them today or later. Always interesting to see how he marks up his charts and the things that he thinks is important. We're all different. We all have a little bit of a different edge that I think we bring to the table. And certainly he has one from the voice of experience and being around for a long time. No vigor, no vim. I don't know what vim or I kind of know what vigor is, but I'm not exactly sure what vim is. But it always goes with vigor. Anyway, as I said, kind of lighter volume. This is, I thought that anything above 393 would be off the races. And we spent really kind of 2 days trying to push up through this. Again, no volume today, up about 0.5% on the S&P cash. NASDAQ's up more like 1%. Earnings have been kind of all over the board. We got a lot more tonight. Biggest winner today is Tesla, and I'm not a big bear on it right here. I was unsure just what they were going to say about how long that they were shut down in China for production, and it doesn't sound like it was as bad as maybe they made it sound. Did see an article that showed just how much money changed hands from the bears to the bulls on Tesla today, and that was a 1.1 billion shares at 145. So I don't know what's happened in the last few minutes, but interesting to see. I guess we can pull that chart up, but that's what they'd be expecting us to do, wouldn't it? So we were throwing them a curveball, but we will bring up Tesla here, TSLA. You got a nice candle. You got volume through the previous high to 792.63. Again, the cult stock of all cult stocks And when everybody's shorting, you certainly do not want to be being on the short side of Tesla. Let me see if I can bring it up for John, who does ask to TSLA. What do we have out here? 24% short yesterday, 29% short the day before. So 1 out of 3. You don't know on those numbers how many people covered before the day was up. All you know is that they originated a short position, but certainly there was enough there. When you get to the bi-monthlies, it tends to be a lot of people shorting throughout the day on Tesla. So they don't really have a bunch up there. They have about what is that? 27.5 million shares short. So yeah, it's what, about 2.5%. So yeah, 3%. So not much, about 1 day to cover. But again, those are always looking at least 12 days, if not longer, in the rearview mirror. Let's do a little history. Then we'll get ready for Tim Ord after the break.
Then it's all just a little bit of history repeating.
On this day, 1972, Can't Buy a Thrill, the debut album by Steely Dan. Danis? It's Dan. Was finished and was released in November 1972 by ABC Records. The album was written by band members Donald Fagen and Walter Becker. Probably the most interesting thing is 2 years earlier they had a drummer that didn't make it this far because he wanted to stay in New York and not go out to California. Can anybody name that drummer? That's the question of the day. But we'll get to it before the break. We won't hold you hanging too long. Anyway, the band, of course, it's hard to think that it's 50 years ago that I heard this. Almost 50 years ago that I heard it the first time. Features extremely tight song structure, sounds from soft rock, folk rock and pop, along a lot of other interesting lyrics and rhythms. But really, really musical ability, and it's something we just don't have that much today. And it makes me a little sad to think that we just don't have great music being produced for the most part today. I'm trying to remember the last group or artist that had a song that wasn't in 4/4 time that got any airplay. And I want to say it's the Dave Matthews Band. I think they had a couple in 7/8. But not very many people have musical chops today. And man, these guys did it. And drum roll. Who was the drummer in 1970 before they hit it big? And then, nope. Chevy Chase. Chevy Chase was a member of Steely Dan before they hit it big. We'll be back in a minute.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we return once again to the microphones with Tim Ord, theord-oracle.com. Tim's written a book, The Secret Science of Price and Volume, also been a market timer for about 30 years and won some Timer of the Year awards in various segments of the market. How you doing today, Tim?
Good. Thanks for having me on again. Hot here. How's the weather there?
Well, when you were a kid, did you ever take a magnifying glass to an ant?
On the hot pavement, you mean?
Oh, yeah. Get your grandmother's giant Hubble-sized magnifying glass and take it out and go after the ants. That's what I kind of felt like today when I was out for a little while.
Yeah, it's been, it's like, I don't know, what do you call it? It's humidity is about 95 and temperature, I think, is 105. So wherever that combination comes out to be, it's super hot here. So
yeah, the only good thing is we're getting a lot of thunderstorms, and that brings the pool temperature down to acceptable in the morning. So
okay.
So we've got the cool pool in the morning, but man, by I'm going to say 10:30 or 11, it's you can say it's Campbell up because it's soup time. So yeah, you got to get your cool in the morning down here.
Oh wow! All right. Send over some charts.
Yep.
We can take a look at the first chart. I've come over the years, the only reason a market makes a bottom because there's panic there. And if you don't have panic, you don't have a bottom. So sometimes these big declines, it starts going down, and everybody's kind of buying that pullback because they think it's just a correction and an uptrend. But the trouble is, if the pullback keeps going until you start to see panic in the market, and that's when the market halts to the downside. And over the years, I kind of developed some indicators that kind of signal where that panic develops. And the more panic you have, the better it is for a longer-term bottom. So you got minor panic, you got a minor bottom. If you got major panic, you probably got a major bottom. So anyhow, I use the trend and actually the VIX. We'll look at the trend first. And this chart number one goes back to 2013. And the top window is the 10-day average of the trend. And the trend, what it is advance over decline, divide that by advancing volume over declining volume. So it takes in volume, it takes in advanced decline. And so it's a good indicator to identify what the market's really doing internally. And normally when the trend is above 1, there's kind of like either you got more declining issues, advancing issues, and or you got more down volume than up volume. So you really want this trend to really go high, showing that you got a lot of down volume going on and you got a lot of declining situations going on. And that's what you're kind of looking for. So when you get 10 days of really bad numbers, as far as advanced decline and up-down volume is concerned, usually close to a low. And the chart there, the top one again is 10-day average. Now mark the times when the 10-day average closed above 1.5. And that's on average, and that's over 10 days. So that's about 2 weeks of really getting bad numbers, I guess you might say. And so when it gets that bad, it's actually pretty good. So I listed all those times when that happened. The last time, around the July 1st time frame, give or take, I don't have the exact date there, but it's early July, within the first week. We had a lot of trend readings that, on average, were above 1.5. So, anyhow, that's showing that we got panic. And the bottom one is the 3-day average, which also got over 2, which is bullish. And the next window up is the 2-day average, up around 2.5. And the window above that is the 5-day average, and it got also over 2. So you had the 2-day, the 3-day, the 5-day, and the 10-day all up in bullish territory. So you had a lot of panic over the last, 1st of July there. So anyhow, that's again, any questions about it? So panic is a key here. Okay. You want to move on?
Sure.
Okay. Chart number 2 is the VIX, and anyhow, when the VIX goes really high, it's usually a kind of a bearish situation for the market. And what I did, I measured the acceleration of the VIX. So when the VIX really jumps high or fast, it's more of a, even though the VIX does kind of identify panic, when it goes really fast, it really identifies a lot of panic in a short-term time frame. So the top window there is a VIX with a rate of change of 2, a 2-day VIX change. So when that velocity really goes up high, it shows that the market kind of had a short-term panic in that time frame. It's not a perfect indicator. This chart goes back to about a year, it looks like, and it shows the times when the rate of change of the VIX hit over 30. And if you notice, they're all pretty good at short-term lows. Had a failure there back in February, got way above the 2-day rate of change of the VIX, did get up way over 30, but it did stop the decline, but only for a couple of days, and it went down lower. But going into that mid-June low, we got the VIX way over 30, and pretty much marked pretty close to the low there, probably a day or so off. But it goes along with the 10-day average of the ARMS index. The previous chart, which got over 10, or which got over 1.5 on average. So this kind of hones in on the real short term. And so, anyhow, we got a decent signal there. And so far, the market's had, from the mid-June low, we basically kind of staggered higher here. And so far, so good. And in my opinion, we're probably even on a short-term basis, we're still going to go higher. not so much because of the spike in the VIX, but because of the 10-day average of the arms giving a kind of an intermittent term signal. So we are bullish. We actually bought a little bit too quick, but we're holding on to that position because we got enough panic to still drive the market higher on a short-term basis. We can go on if you want.
We're about ready for the break here. We'll take a little bit more look. We've got Tim Ward on from the ord-oracle.com, and we got probably come up with some questions here after the break. We're also going to talk about gold later on, but that's it. We'll be back in just a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And as we come back here to the phones, we've got Tim Ward on the line. We're looking at chart 2. You have much else on this? Or?
No, it's kind of a simple chart. It's just kind of coming up different ways to try to measure panic, and that's a decent way on a short-term basis. But the 10-day arms on an intermittent basis is the best I found so far. We got some more stuff on the VIX on the next chart, unless you have some questions on chart number 2.
No, we'll go to number 3 here. Go ahead.
All right. This is the middle window there is the VIX to VVIX ratio. Okay, the VIX is, the panic indicator. Well, the VVIX is the VIX of the VIX. So don't get too complicated, but when the VIX is outperforming the VVIX, usually you got you got an uptrend in that ratio and a downtrend in the market. But when you get the RSI of that ratio, in other words, it's kind of like the VIX has gone up too fast compared to what the VIX VVIX was doing. Normally, you got enough situation for a pretty decent low of a panic low. And so I marked all the times. This is the top window there. That's the RSI of the VVIX to VVIX ratio. And every time it got above RSI of 70, you were at a short-term low. If you go down to not the bottom window, but the second window up from the bottom is percent B. Now, the percent B, when it gets above 1, that means it's hitting the upper Bollinger Band. So the VVIX or VIX to VVIX ratio, when it hits the upper Bollinger Band, that percent B will get above 1. So it's kind of another indicator to tell you when you're at a potential short-term low. So when the percent B of the ratio and the RSI of the ratio both get into, bullish territory, normally at a short-term low. And I did those times with the red vertical lines going back. And if you notice, it worked out pretty well. There's a failure back in late April. It gave a signal, and that signal, kind of flipped the market sideways for maybe a week or so, then went down lower. But we had two signals here, one in mid-June and one 1st of July. So it kind of matches the other signals we got on the 10-day average of the ARMS and also the rate of change of the VIX. So just more indicators. The more indicators you can to signal either a top or bottom, the more chances that group of signals will identify a reversal in the market. And so that's what we're trying to do here. Try to get different types of signals to hopefully line up together. And if they do line up together, then your chances of success increases. And that's what we're attempting to do here. So, again, we got one in mid-June, which turned out to be right smack at the bottom. We got here another one in 1st of July, which lines up well also. So we think, at least on a short-term basis here, we got a worthwhile bottom forming, and the market is staggered up over the last month or so, but it's kind of flipped sideways here. Now we're trying to break above some previous highs, and so far looking pretty good. I think on a short-term basis, we may get back to the previous highs of late May, early June, maybe up around that 420 range. So we'll see what happens. FOMC meeting comes in next Tuesday, Wednesday. So we're if we get up around that 420 range and we're hitting next Tuesday, Wednesday, a lot of times these FOM meetings can reverse the market. So if you're going down to an FOMC meeting, a lot of times it's a low. If you're going up into an FOMC meeting, sometimes it can be a high. So we're kind of watching what's going on here. We're pushing up today a little bit, not a lot, but we'll see how the market goes here. But we are long, and we still think 420 is a reasonable target on a short-term basis. Then from there, we're not for sure, but it's starting to look like on a longer-term time frame that May low may have been actually not the May low, but the mid-June low is starting to look like an important low, and this possibly could be low for the year. It depends how this rally continues here. We want to see kind of a sign of strength off this low, and we did have one actually in mid-May. We had the 4-day average advanced decline line hit over 4, in other words, 400% on a 4-day period. In other words, 4 times as many up issues as down issues, happen over a 4-day period. So that's pretty impressive. And also the McClellan oscillator, back from the mid-May low up to the late May high, McClellan oscillator got to 351. Yesterday, McClellan oscillator closed at 200. And so on this rally, if we can get up to around plus 300 or better, we'll have another sign of strength. And these signs of strength usually shows up at bottoms. They usually don't show up on minor advances. So if we get another sign of strength, there's that attitude probability that mid-June low was an important low. So it's a little bit too soon to say yet, but we'll see how this rally goes. But if McClellan oscillator does get over plus 300, say, this week still, which it still could, or early next week, then my conclusion would be that that mid-June low was a low for the year. So we'll have to wait and see. That's a lot of ifs, ands, and buts. But market's kind of doing what it's supposed to be doing off of bottom so far. So we got the panic. We did get a sign of strength, 2 different type indicators in the that May rally. Even though we went back down and hit a lower low, we got a boatload of panic at those lower lows, and so we got a lot of fuel, I guess, because we had a lot of panic at that mid-June low to really fuel a decent rally here. So it is what it is. Nobody kind of believes this rally will last because whatever inflation or whatever people are thinking about, the market's kind of saying a different story. So we'll see how it goes here over the next several days.
Just one question, and that is, you've got the VIX/VVIX ratio percentage size B greater than 1. I've got a question of what's B?
What's what?
On the
what's
chart
B?
here, you have ratio percentage B greater than 1.
Right. That's the B stands for Bollinger Band.
Okay.
And so when it gets to 1, it's hitting the upper Bollinger Band. When it gets down below 0, it's hitting the lower Bollinger Band. And in the middle, I guess it's 0. So
yeah.
So yeah, 0. So all right. I'll say.
Okay, we'll be back in a minute with Tim Orr to the or-oracle.com. And we still have maybe a couple of questions. You can give us a call at 877-927-6648, and then we're going to talk gold.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
As we return, we've got Tim Ord on from the ord-oracle.com. Tim, as we go on, everybody wants to know when the big drought is going to be over. We're not talking about the drought in the wheat or cornfields. We're talking about the drought in gold. What do you say?
Yeah. All right. Well, the chart that I sent you here, this goes back to 2008. And we'll start with the bottom chart. The bottom chart is the 50-day average, and this is a daily chart, but this is 50-day average of up volume, down volume percent. And the next window up is the advanced decline percent on the 50-day average. And so I'm looking at the bigger picture. I wish I had those indicators go back further, because there's not counting the current time, but the previous 4 times when both indicators got below minus 20, you were at an intermediate term low. And I circled those in blue. So even though there was a bear market back in 2012, that particular, those 2 indicators did identify that balance you had that lasted, looks like about 9 months there. And the market was still in a bear market in 2014, and also identified that, I guess, intermediate term rally. And then 2015, that was a major bottom, kind of went sideways, looked like for about 7-8 months there before you had that huge rally. And we had one, this indicator did pop back in October of last year, went sideways until the first part of the year, then had that this year's early rally, and now it's doing it again. We had, I think it was July 1st, both indicators hit below minus 20. And so even though we did break below that trend line right there, which usually the gold market does, it breaks some important, seem like trend line to get everybody out of the market, I guess you might say. And so we're looking at an intermediate term low according to this indicator. The previous 4 all worked out. The only problem is we'd like to have seen more examples over the years. We didn't have that data going back any further than back in 2010. So I like to have seen a lot more back, but it's done a good job working out. It's pretty much identifies the times when everybody's pretty much just bailed on their gold positions. And so I guess this is what this indicator implies. It changed from weak hands to strong hands, and we're sitting on that time right now. Also, we have a 8-month cycle coming in right now. So both these type of indicators kind of lined up well. But we could flip sideways, which happened before at that mid-2015 low. It hit sideways for several months, and same with the one in October of 2021, flipped sideways for it looked like about 2-3 months before it finally rallied. Don't know if we're just going to go up here or just trend sideways for a while before it goes up. I don't know, but downside appears to be done, at least on an intermediate term basis. So previous signals lasted couple 3 months. So we probably expect this one to last at least a couple 3 months. Could go on for maybe a year at most. Previous ones came close to a year or so. But markets, if you look at it, it's had a lot of damage over the last several months here. So, and this is what the gold market does. It gets everybody out. And so now we'll probably have a rally, and how far this rally goes, we don't know. But I wish I would have sent the gold market over. That there's a big chart that goes back to I think 2008, and it's a big pattern on GLD and also on gold. And it looks like it's building a right shoulder of a massive head and shoulders bottom, and we're finishing the right shoulder right now. So I didn't send that over, but if it works out, then gold could really rally strongly here over the coming months. So, not sure if it will or not, but if it is a head and shoulders pattern, it really gives a hype. I forgot what the projection was, but it's up around, 2,500, 3,000 level on gold. But I don't have that chart shown here. But as far as gold stocks go, it pretty much will wash out move here, according to this chart.
The GDX and those ETFs, I kind of vaguely remember, I was trying to find it on Google and couldn't find it, when they actually came into operation on the index. I remember there was a big debate about how it was all situated and what it would do to gold and gold miners. But what is it, like? Does it 2006, 2008? Does that sound about right?
When GDX became, it doesn't go back real far. It's fairly new, I guess you might say. And it's about 30 some stocks in GDX, the ETF. But it's kind of like all the majors are sort of in there. Not as, I don't have that list of stocks, but it's fairly new. And so that up-down volume advanced client indicators is only measuring those stocks in GDX. So it's a fairly narrow range, I guess. It doesn't have like the S&P 500 where it has 500 stocks in it. It only has about 30 or so, 31, 32 stocks in it. But according to these indicators again, but those 30 pretty much stocks are really hit rock bottom here, because the advanced decline and up down volume both hit in a level in the past that it's kind of like if you look at these type indicators, these are kind of like combined is like a trend, because it takes up down volume and it takes advanced decline. So this is like a trend reading of something probably above 2 or better, as far as the market is concerned. And this is a 50-day average, not a 10-day average. So you're taking a big picture. So 50-day average is over 2 months, 21 trading days in a month. So that works out 42. So this is about two and a quarter months of the market getting hit to the downside, I guess you might say, according to the 50-day average. And it's like a trend reading, blowing out to the downside for 50 days. So it's a pretty extreme, I guess. If you look, how many times it happened going back to 2008, not counting this time, but it only happened 4 previous times. So it's a rare event. This doesn't happen every year. You get one, maybe you're lucky to get one a year. Not even that. You had 2 back going into the lows of 2014 and 15, and we got 2 now going into the current low.
I want to thank Tim for being on. Tim, you can reach him at the ORD, that's ORD-Oracle.com. If you want the charts, email me at path@tfnn.com. We'll be back in a minute. Thanks again.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we return, we get ready for another big night of earnings. We certainly had that today with a ton of them. Of course, after the bell tonight, we go right back into the breach, dear friends. And that's with Capital One Financial, Tenet Healthcare, PPG Industries, Seagate, Robert Half International, Intuitive Surgical, which always seems to be a trip on earnings, Metal, Snap, Boston Beer. I think there's a lot of shorts in Boston Beer. Cereal malt beverages. How could you short that? Western Alliance, Ozark, Bank of the Ozarks. That's kind of most of that for tonight. Tomorrow morning, we've got Verizon, HCA Healthcare, American Express, Schlumberger, Cleveland Cliffs. So we're going to get a little bit more read on the rest of the economy. We also have Twitter coming out with earnings tomorrow morning. That's been one that everybody likes to jawbone about. I don't know if there's a lot to jawbone about it, but that'll be at SIFI. And that kind of gets us into next week. for earnings. And, of course, we get into next Wednesday, and we have the Fed. And everybody seems to be kind of whistling past the graveyard. Just a week ago, everybody was talking about a 1% rate hike. Now everybody's, I think, trying to pretend that it's going to be 0.5%. But I do not know. I have a feeling that it's going to be a lot more aggressive. And so the question is, we're kind of playing that game of chicken at the very end of Rebel Without a Cause. We're just going to find out if anybody goes off the cliff. Sell when you can, not when you have to. We will return like a bad rash tomorrow.
Building wealth trading in the stock market seems impossible to